your own experience, for the benefit of all our viewers, most of who are investors into the equities as well, over the years that you've been investing in equities, how much importance do you really pay to the macros and the developments across the world, like the ones that we are seeing right now, and also the Fed commentary, the interest rates, before deciding on your investments in equities?
So clearly, when one is investing in Indian capital markets, I think the domestic macros is a huge differentiator, and one needs to focus more on that as opposed to global events on a on a longer term basis. On a shorter term basis, yes, probably these kind of large events do have an impact on Indian markets. That it create more volatility. It creates probably a degree of lack of confidence on the extent of ripple effect it could have on various economies, on growth, on the global growth, on potential impact it could have on certain industries within India. But that's only for the short term. On the longer term, I think what matters really is the domestic growth and the kind of corporate earnings that really come by, and what kind of an impact these kind of interest rate hikes in the domestic market, as well as whatever movements that happen as far as the currency markets are concerned, how much impact that will have on corporate earnings. I think those are about the key points as far as domestic macros are concerned when one looks at
Sure.
corporate.
Sure. What would you anticipate as the key triggers now for the markets ahead, now that the big event is over and done with? We've also seen the regulatory, actions to, prevent a contagion of the banking crisis to spread pretty fast, and they've been pretty proactive this time around when we compare with the 2008 crisis. So most of the experts have been saying that we are not likely to see an event like the 2008 crisis, but we are still, looking at how the scenario is playing out. The key triggers that could really impact the markets and the trajectory going forward from here. Do you believe there are enough legs and enough tailwinds to pull markets out of this volatile and consolidative period that we've been seeing?
So as far as Indian markets are concerned, I think two events over the next few weeks are going to be key. One is, of course, the RBI meet that will be there, and what's the view that RBI has as far as inflation is concerned, as far as growth is concerned, and interest rates are concerned. Of course, as far as currency is concerned, because there are hopes gradually that once the interest rate cycle in the US peaks out, there could be a potential appreciation as far as the Indian rupee is concerned. So that's something that the views of the RBI would be important. I think the most important would be, of course, the corporate earnings, which one will
Sure.
start seeing in 2 or 3 weeks' time, and what's the impact that higher interest rates or continued sort of weakness in the rupee have had as far as exports are concerned, or as far as broad corporate earnings are concerned. I think these two would be key as far as domestic markets are concerned.
Okay. Now that we've been discussing a lot how this is changing in the global markets, for Indian markets as well, the interest rate hike fear still not behind us, financial crisis still unfolding, the world economy slowing down. We are seeing all of these factors really play out. How have you really changed your investment positioning, your portfolio positioning at this point?
So I think as far as investments in India are concerned, like I said, for the long term, a lot of these global macros do not have a major impact, unless, of course, one is investing in a company which is largely dependent on exports, and where potentially there could be a slowdown as far as export orders are concerned, given
Okay.
the impact on sort of global growth is concerned. So the moment you have global growth slowing down, you have a lot of export-oriented companies which potentially could get hit. So I think what we've looked at over the last few quarters is ensuring that there are more domestic-facing companies with relatively or almost no leverage, which probably are likely to throw up far more consistent profitability and growth in earnings quarter on quarter, as compared to those which are more leveraged, which would have got definitely impacted by interest rate hikes, as well as got impacted by slowdown in global growth.
Okay. Any pockets that you're bullish on now, and you want to stay away with from right now in the current market scenario?
Well, there are sectors and sectors which probably give a fair amount of confidence as far as India is concerned. Banking clearly stands out given the cleaning up of overall balance sheets are concerned and strengthening of balance sheets. And one sort of uh, differentiates or distinguishes that from the extent of uncertainty that's been created by either of Credit Suisse and or SVB in the European as well as the US market. So, given that fact, I think the Indian banking system far more robust and cleaner. Uh,
Hmm.
the capital goods space continues to look very interesting given the kind of continued flow of orders and fairly robust execution that is there. So that's one space again which is likely to continue to show a fair amount of growth. Uh, we believe there could be a degree of uncertainty as far as IT is concerned.
Yeah.
If there is that slowdown as far as order flow is concerned from both from Europe and US.
Mm-hmm.
Uh, that's something which probably needs to get watched for a quarter or two in terms of order flow, order execution, uh, and which could potentially change any view as far as IT is concerned. But yeah, there are some of these sectors which do infrastructure again looks to be positive given the kind of spending that's likely to be there in the election year. So yes, there are these are three or four spaces which look fairly we are fairly confident on and which are likely to show up fairly decent or consistent top line and bottom line growth.
If you like the video, do like, comment, share and subscribe.